Hey traders, welcome to Predictive Analysis. Today we're going to give you guys our predictions on the top 5 major pairs, including what they've done, where they're at now, and what we expect them to do in the future. Give you guys the trade ideas that we have on these top 5 major pairs going into this week and what we're expecting each of them to do. We'll also be talking about a consolidation pattern that can be extremely useful when markets are not trending. So after the intro and disclaimer, we'll be coming at you with some really valuable content. And guys, if you're new here and this is the first time seeing our video, I'd like to say welcome to the trading channel. My name is Steven, your honest trading coach. And if all of this information sounds like it'll be beneficial and is something you'd like to be notified about each and every week, join the over 60,000 trader community that we currently have here on YouTube by clicking the button down below to the right hand side, little red button that says subscribe. Also click the notification bell to be sure that you're alerted when we come out with these videos each and every week. Click that like button for me and I'll go ahead and let the intro roll. Welcome back, traders. So let's go ahead and get started with the good stuff. We're going to go ahead and get started with the consolidation patterns we were talking about that can be beneficial to your trading when a specific market is not necessarily in trend. So as we know from last week's video here on the euro dollar, this market, if I zoom out to a daily chart, is clearly in a period of consolidation. Let's zoom in right here and I'll show you guys what I'm talking about. All right, so here we have a level of resistance that's been tested multiple times. We also have a level of support that's been tested 3 times right in here as well, signifying that this is a period of consolidation. Now overall, of course, we are still in this downtrend, right? If we zoom out the chart, you can see that we're still heading in the downward direction here on the euro dollar, but we're taking a brief pause here on the daily chart. I say brief, this pause has lasted a little over 2 months at this point, but we're taking a pause here at this level. And during this pause, we're going to see some consolidation in the markets. There's going to be some indecision. We're going to go back and forth between resistance and support. In areas like this, it's really difficult to take advantage of trend continuation trades. So if you're a trend continuation trader, you're going to have a really difficult time making any profits during this type of consolidation period in a specific market. Now the question becomes, if that's the case, then how do you take advantage of consolidating markets? Well, a way that I've taken advantage of consolidating markets, something that's been extremely beneficial in my own personal trading, is using something called advanced patterns. These are consolidation patterns that tend to occur when a market is not trending. So let's zoom back down to a smaller time frame. Let's get back down to that 1 hour chart and talk a little more about this. The specific pattern you see on the screen is called a cipher pattern. And it's one of these advanced patterns that I'm talking about. There's about 4 main ones. And if you want to learn a little more about these advanced patterns, I have a few videos here on my channel for free. I also have some free information if you sign up for our email list. The link for that's in the description about these patterns. But let's go ahead and discuss this specific pattern now. Here on the euro dollar, as we just discussed, there was a downtrend already. Then the market broke into this period of consolidation. While we're in that period of consolidation is when I like to start looking for these advanced patterns. And for these advanced patterns, we are looking for a set of specific Fibonacci ratios. So for instance, for the cipher pattern, we would be looking for a 382 retracement of X to A. These are 5-point patterns, X, A, B, C, and D. So we have X to A. And on this X to A move, we want to see a impulsive move in a specific direction. In this case, it's bearish, it's a move down. We have an X to A move, we want to see a 382 retracement for this advanced cipher pattern, and then we follow that. Again, this is a sequence of Fibonacci retracements and extensions. We follow that with an extension, the same X to A move, X down to A, back up to X. We want to see a 127 extension here, and that's exactly what we get. I'll circle that for you to make it easier to see. Here's that 127 extension hit. And so if we're labeling these points, and I'll go ahead and actually label them for you to make this a little easier to understand, we have X to A, up to B, down to C, and up to D, specifically here for the advanced cipher pattern. Now, we've already discussed X to A to B to C. The last thing we need to talk about is D. How do we find that D point completion for this specific consolidation pattern? And the way we do that is pulling from X all the way down to C. And we'll find that D point at 786 retracement. And as you can see, this market came up into that level while in a period of consolidation on the daily chart, an added benefit of previously being in a downtrend, and this was a bearish consolidation pattern. Because of all those things coming together, the market reacted quite well to this advanced cipher pattern, and as you can see, the market did in fact continue in that downward trend we saw from earlier about 2 or 3 months ago on the daily chart. So that's a little bit about advanced patterns. It's a little bit about some things we can use during consolidation periods when the market's not necessarily trending in a certain direction. Let's go ahead now and start talking about our predictions for this pair though. Let's go ahead and zoom back out to a daily chart, break into our normal predictive analysis. As you can see, and even since last week, we've been waiting on this market to either come up and hit the 118 level here on the euro dollar around the bottom of this red box. We almost got there earlier last week before the market pushed down, but now that we're pushing down, the more likely scenario is that we at least come down to retest this. Now this level's already been tested 3 times and very, very close together. It's been tested 3 times without a large span of time in between these 3 tests. And normally, yes, we look for multiple tested levels of structure, but when a market's tested a level of structure this many times in this small of a time frame, it's normally actually a bad sign. So what we're expecting is this market to continue in this downward direction. Could we see a pushback up to 118 before we do that? Yes. And that's the point of predictive analysis. We're not saying that the market's going to fall from right here. We're not saying it's going to go up from right here. We don't know what the market's going to do from right where it's at right now, and that's not important. Predictive analysis is saying, I know that if the euro dollar goes up to 118 even, then I have an opportunity for a trade. That's going to be a zone that I'm going to look for a trading opportunity. So for the euro dollar, if we make it back up to 118, that's a level that we're going to look for a trading opportunity from. We're going to be looking there for possible short trades. Now, if we get a push down and trend continuation, we may look for trend continuation plays on smaller time frames. Also, if we get a break below 115.5 and a pullback up into 115.5, we're going to be looking for trend continuation out of this pair. Those are the 2 things we're looking for. We're expecting trend continuation to the downside out of the euro dollar. That's how we plan to take advantage of it. Let's go ahead and move on to our next pair. Next up, we will take a look at the dollar yen. The dollar yen has been pushing up. We've had a pretty nice uptrend on this pair. We actually caught a really nice trade out of this pair, breaking out of this ascending wedge pattern, still involved in this trade. And we've now come up to the 113 even handle number. Between this and 113.5 area, really 113.3, between there is a zone of resistance looking left. Let's go ahead and take a look at that. For those of you who are beginners, what these horizontal lines are is predictive points that I've mapped out using structure analysis. So what I'm looking for is a level in the market that's been tested multiple times in order to call that a level in the market that is important. In order to see it as a level the market could react from again. As resistance, if the market's pushing up towards that level that's been tested multiple times, as we can see looking left here, we have 3 tests of resistance, another test of resistance here, more tests looking left of that level where the market reacted from it. So now what I'm expecting is that if this market gets up to 113.3 in that zone, and really 113 even where we're at now could also be a point where the market could fall, we're expecting this market to have some type of counter trend move pushing down. Now if we get that counter trend move, we can look for counter trend trades about where the market is. We need a slight pullback back up to at least 113 before we're going to start looking for those counter trend moves to the downside. Also, if we get that push down, we're looking right at 112 for possible trend continuation out of the dollar yen. So predictive analysis, remember, I'm not saying what the market's going to do right now. I'm not even going to try to predict that. I have certain levels in the market that I'm paying attention to for trading opportunities, but only when the market gets to those levels. So if we get back up to 113, looking for a possible counter trend to the downside. And if we get down to 112, looking for trend continuation out of this pair to the upside. So that's what we're expecting out of the dollar yen. That's how we're planning on trading that throughout the rest of this week. Let's go ahead and move on now to our next pair, which is going to be the dollar Swiss. Here on the dollar Swiss, we just bounced off a resistance level. We came back down into 0.997, which was a previous resistance level, as we can see looking left here, that is now turned into support, pushed the market back up to that 1.003 level, and then pushed it back down. Right now we're consolidating pretty heavily on lower time frames here on the dollar Swiss. I have no trading opportunity on this pair. That's okay, guys. Sometimes it's necessary to sit on your hands when it comes to trading. Now, when will we have a trading opportunity? If this market pushes up, the next time I'll be looking for a trade is if we get up to 1.0095. At that area, I'll look for some kind of counter trend push down. As you can see, this market really just in a period of consolidation in between these 2 levels. If we get that breakout, I'll be looking at that level right there, 1.095 or 1.0095, excuse me, as a level to take a counter trend push down after that breakout, and back at where the market is currently around 1.0033 is where I'll look for possible pushes up, a possible trend continuation play after the breakout. predictive analysis, guys. We're waiting on the market to do something before we predict or even make a trade based around what the market's done. So this is predictive analysis 101. This is exactly what we're waiting on here on the dollar Swiss. We'll go ahead and move on now to the pound dollar. Here on this pair, we're actually right at a level of support. So this being the case, we're looking for long opportunities on the pound dollar right now. We're expecting this pair to find some kind of support here. And as you can see, we've been in a massive downtrend, guys. We're not expecting a huge reversal from this point. We're not expecting this market to start going up and make it to new highs on the daily chart, but we are anticipating some type of counter trend bounce from this major level of support, enough to give us a counter trend play on a lower time frame where we can capture 80, 90, 100 pips off of a counter trend bounce. So that's what we're looking for immediately here out of the pound dollar. And again, predictive analysis, guys, that's what we're looking for if the market stays where it's at or gives us an entry to go to the long side. If we break below this level, predictive analysis, if we break below this level, we'll be waiting on a pullback up into this same level around this blue line at 1.3055 for a possible trend continuation play. As you can see, this market been on a downtrend for a while now, and that's what we're looking for here out of the pound dollar. Next up, and our final pair of the day, will be the Aussie dollar. Here on this pair, another pair that's in a period of consolidation. It is the summertime, guys. This is what we're going to see probably for a majority of the summer for the next couple of months. But we do have our resistance level here and our support level at 0.7333. If the market pushes all the way down to that level, as you can see, we've already gotten really close with this wick before the push up right here. But if we can get back down to this level again at 0.735, between that and 0.733, we can look for possible pushes up off of this support level in this period of consolidation. If we make it back up to resistance at 0.745, then we're looking for possible shorting trades from that resistance level in this period of consolidation here on the Aussie dollar. And that's what we're expecting out of the top 5 major pairs, guys. Again, I hope this video was valuable and beneficial to your trading. If it was, smash that like button for me. Make sure you're subscribed if you are new. If you're interested in taking a shortcut to fast track your trading success and to learn the strategies that we use every single day in the markets based around the structure levels, based around other strategies that are simple yet effective in the markets, then we've been able to help thousands of traders over the past couple of years with some of our paid content as well, where you can get a little more of a personal connection with me. Ask me any questions that you have about the training that we offer or about the Forex market in general. So if you would like to be personally mentored by me, then there's a link in the description for our training program called the EAP Training Program. If not, that's okay too. We have plenty of free valuable information right here on YouTube. If you want to find more of that, type in The Trading Channel on the YouTube search bar or on Google. I wish you the best of luck in all your future trades. I look forward to seeing you in the next video, and I'll talk to you guys soon.